Hello, everyone. Welcome to this special edition of Silicon Dragon Online. Today, we are turning to Asia and the emerging giants in the Asia Pacific region. It's going to be a really interesting webinar, I think, because we're going to meet some of the founders who are emerging, and we're going to meet some of the change makers behind them who are making it all happen, including the markets. So we have an hour-and-a-half long program. We're going to be moving swiftly through, so hopefully you're all joining in, and I really appreciate everyone joining us today. So just a few words about Silicon Dragon. We've been doing this for about, we've been going online for over 2 years now, and we'll be going back to in-person pretty soon. But until then, hope you'll enjoy this program. We have a real cross-border program tonight. We have countries represented from Asia and also many states in the US and perhaps some European countries as well. So it's going to be a very interesting night or morning Asia time. I gave it away. I'm here in the US. I'm actually chiming in from New York City for a change rather than Silicon Valley, but I'll be back to the Valley in a few weeks now. So, okay, well, anyhow, Silicon Dragon Ventures, if you don't know us, check us out. There's our website and all our bells and whistles as well. So today, as I mentioned, we do have a packed program. We're going to be hearing from some of the leading founders, such as Yat Siu of Animoca Brands. If you don't know him yet, you're in for a treat when we get to his part of the program. Now, to tell us a little bit more about this study, I'd like to introduce Darren Young, who is really the man behind this whole study or thought leadership report, Emerging Giants in Asia Pacific. Darren is the head of TMT for KPMG Asia Pacific, and he is going to be giving us a little briefing on why KPMG did this report and what were some of the key takeaways. So Darren, why don't you do that, and then I'll follow up with some questions for you.
Sure, Rebecca, and first of all, thank Silicon Dragon and yourself for having us today. So really pleased to be here, and hi everyone. Really looking forward to engaging and sharing a bit more. I think after that intro, there's probably a big target on my back now because there's a lot of questions around like, how did we come up with this list and all those sort of really interesting questions. But maybe I'd start with the why. And why did we do this? Well, we did this together with HSBC and you know, all of us around the world, from what we're seeing around private equity, banking, the innovation that we're seeing across the region is phenomenal. You know, more and more so we're hearing questions around what's happening in Asia, not what's happening outside of Asia. Mm-hmm. And so no one had really looked at what does that environment look like, and what are the companies that are being invested in, and what are all the really interesting, cool things that are taking place across the region. So we commissioned this report to really start to investigate what are the new areas of investment. And so with that, we sort of cast the net wide, and we looked at, you know, around 6,500 companies across the region. We leveraged data from PitchBook to basically look at valuations as a key criteria. And what was quite interesting, we started to look at tech areas. So we wanted to look at the emerging tech. So all of us hear about fintech, log tech, health tech, and all those kind of high level tech, you know, narratives. But we want to go a little bit deeper and start to find out what's happening across the region. And so as we looked at those criteria and looked at those companies, it was really interesting to see the 20 different subsectors that were mentioned, including, you know, NFTs and DeFi being up there as the top 2. You know, we looked at the top 100 across the region, of which there were a lot of China and India companies, but then we looked at top 10s across 12 different markets to understand what does that, you know, what does that look like at a country level. So Rebecca, that was kind of the thinking, the approach, and you know, it was fascinating. The response was overwhelming in terms of expectation, in terms of how many people were reaching out. You were very much involved in this too. So I thank you for your support along that journey as well. It was really a great collaborative approach. And so for all of those on this call, I think the main message is, have a look at it and see what's happening in each market. In terms of, future, we are looking to do it again. So it's something we'd like to do annually, and continue to update how do we, share with the world what's happening in Asia. So that was kind of a summary, Rebecca. Hopefully that gives everyone a bit of a view as to what we saw and why we did it.
Yeah, I mean, I think it really is a representative sample of what's happening in Asia in terms of the kinds of technologies and all the markets that are involved. So this report went into Korea, Japan, Australia, Indonesia, Vietnam, all the markets. And we had a company from every single market. I think India had 2, but India was the only one with 2. And that's actually follows what's happening in that market too, because India is one of the hotter markets right now. But in terms of technology, what are you seeing in the region that's really coming forth that maybe Asia excels in more than any other region in the world?
So I think what was, on trend was the metaverse, right? And we all hearing about that, but often you hear a lot of hype, but I think that was translated in the type of industries that were coming forth.
Yeah.
So I think that was a key message, and companies, as mentioned, like NFTs and DeFi really stood out. The number of tags of those type of nature of companies were the top 2. That was quite surprising. But also there were things like blockchain, real estate, and decentralized autonomous organizations came up. So again, that was really quite interesting. And I think the other interesting factor was, we've heard a lot about what's happening in China in the past, and we all know that in Asia. But I think drawing to light the type of companies and the depth of what's happening in China was really, really quite telling. But having said that, the flavors within each of the other countries that we looked at were quite interesting. And this hyper-localization of technology to apply into local cultures and locals' ways of working, that really stood out for me in terms of the opportunity in the market in the region, and how tech companies were really trying to go after those local markets.
Right. So the localization aspect is very important, but also the whole regional aspect. And some of the companies are already going global too.
Absolutely. I think that's the thing. So with digital, you can go multiple countries, right? So you can start in Singapore and go to Southeast Asia, or you can go from China and stay in China, but go broader and deeper across sectors. So technology cuts across sectors and geographies. And I think the ability to use platforms to do that and software to do that was key. One of the interesting factors, and this didn't come out clearly, we didn't state this, but we did another analysis of all the companies that were listed. And what we found was that almost 80% of all the companies listed uses the word software or platform in their descriptor. So that really reinforced the point that, these were platform and software companies trying to address user groups across countries, within the countries, in different ways. And so that was quite interesting and quite important sort of thing that we saw.
Okay. So in this report, do you think you have highlighted a new company such as Baidu or Alibaba or Tencent or one of those companies? Is there one of those in this report?
Absolutely. I don't know which one it is, Rebecca, because if it was, I'd be putting my money behind them right now. But I think absolutely there are really innovative things. And I think hopefully as we do this year over year, we can sort of map and understand the trends and who's doing what. I think that's kind of the journey. The other thing is, if you look back on these big tech giants or unicorns that have been successful, the journey isn't that often that quick. It doesn't take 1 or 2 years. It takes maybe decades to get to the point. So I think being able to see a longer term view and trajectory is part of the reason why we want to be doing this consistently. Right. Looking at the trends, because I think they're important and where VCs are putting their money. Looking at the country trends. And I think, in short, absolutely there will be, unicorns, decacorns coming out of Asia. And it'd just be fascinating to see how countries respond, because we had so much government interest as well, because many of them are supporting these very startups at a national level. So the tension around, geopolitical or country level tension, multiple areas of disruption across sector that we're seeing, targeting these new opportunities using software and platform. I think that's where the opportunities lie, Rebecca. And I think the message to everyone that we speak to is you can go create your own startup if you've got the right business model and thinking, and you can grow up to be a unicorn or decacorn.
Yeah.
And by looking at these type of reports, it gives you a sense of where everyone is playing and perhaps opportunities, niche markets that you could go into, or at least seeing what else everyone is thinking about.
Right. So it's good that there are still niche markets there that are ready for startups. But of course, all these startups face, challenging times. Sometimes they have to pivot. Sometimes they have to change the business model. Sometimes they have to change the team. Was there one kind of underlying theme that came out of what's the most common kind of challenge that they face?
Yeah, I think customer engagement. I think technology alone doesn't win customers, because if it was so easy, an idea could be built and you'd have millions of customers. So customer acquisition, you're taking customers either away from a competitor or an incumbent, and you're trying to create a new market, a new opportunity. And so that requires a bit of thinking, because as you and I know, we tend to be creatures of habit. We do things that we're familiar with doing. And so if we're trying to do something else a different way, for example, pay via an app that is doing groceries, that's not a natural thing to do. And so there's the building of the trust and the way CX works is key. And the other thing I mentioned is funding. So I think obviously we're seeing the 2022 funding, available funding, and with the recent market situation, we see access to capital being a little bit more rigorous. People are going to be more wise around about where they put their money, and so therefore, as people starting out companies, focus on customer journey, revenues, profits. These are the type of things that I think investors are going to want to look out for more, rather than just a great idea that uses the word crypto or NFT in it, because that was kind of what happened I think last year.
Right. Yeah, you can't just attach that on, and it has to have some meaning, right? Okay.
Yeah, well, I think so. Yeah.
Okay, well, good. So this report actually encompassed 13 different companies, 3 markets that are in the report. Of course, the whole report examined a lot more, but in the actual write-up of it, I'm talking about the write-up of it, 12 countries, 3 market snapshots, 13 founder interviews. And Darren, great. Really appreciate you taking us through the report. And yeah, I think it's gotten a lot of good reaction from the market, and people can download this from KPMG, right? They want to see the whole report.
Yeah, absolutely. Just Google it and you'll see the link, and then you'll see all the press and stuff, and just jump on. But thanks, Rebecca, and it was great.
Right.
I hope everyone gets to get something useful out of the report. Thanks.
Okay, thank you. All right. Well, next, moving right along, I'd like to introduce our market movers here. Anson Bailey, head of technology in Hong Kong, China, and head of consumer retail for Asia Pacific region. And Jane Chan, hello Jane, head of Start Me Up Hong Kong at Invest Hong Kong. I know it's a big week for Start Me Up Hong Kong. And so we're happy to be a community event as part of this week. So now these two are going to chat. So that means that I'm going to go hide away while they chat. So Anson and Jane, you've got like 12 minutes to go through 8 questions. So take it away.
Thank you. Thank you, Rebecca. And good morning, everyone. Actually, a good evening. Great to catch up with everybody. And again, a big thank you to Rebecca for being one of our partners in crime in pulling together this paper on emerging giants in Asia Pacific. I also want to give a shout out to my colleague Darren Young, because Darren and I were talking about we really needed this paper, because there was lots of talk, as we know, about the US. There's lots of talk about the Silicon Valley, what's going on across Europe. But quite frankly, there's also a big discussion that needs to take place right now about what's happening here across Asia, across the whole of the Asia Pacific region. And Rebecca, one thing I would say to everybody is I kind of feel that this is a coming of age, right? It's really about Asia and Asia Pacific now coming of age. So again, a big thank you to everyone involved. A big thank you to Darren Young for leading the charge. And if you have any difficult questions, please direct them to him because, of course, he's ultimately responsible. But joking apart, we've, I think, had a blast in pulling together this paper. We've spoken to a lot of different people. We've collaborated with our friends at HSBC. We've also used a lot of the data points from PitchBook. Because again, Jane, I think that was a question, and Rebecca, that was a question we had from a lot of people is, well, how about the research? And what I would say to everyone is we used a lot of those data points from PitchBook to come up, and we sliced and diced this information in lots of different ways, scratched our heads. And I think, as Darren said, this is the first report. We absolutely intend to issue a number of these reports as we move forward. And it was quite interesting, Rebecca, because a number of different government departments actually reached out to us and said, oh, we'd really like to see how we can collaborate with you. But anyway, what I'd like to do right now, I'd like to have a quick conversation with my good friend, Jane Chan, head of Start Me Up Hong Kong. Jane, it's been a busy week so far because we've got this little startup festival called Start Me Up Hong Kong, which is just getting bigger and bigger every year. So how do you feel right now? Have you had enough sleep? Have you had your morning coffee? Because it is a massive week. But what are you hearing from people?
We have had, a fantastic response, and thanks again, Rebecca, for having me, and Anson also for inviting me. You're right, the Start Me Up Hong Kong Festival is something we've been working on for the past 7 years, and this week we're right in the middle of it. And as Rebecca mentioned, this event itself is actually one of our community events. And in addition to this community event, we've had, 4 main events happening already thus far. We've had the GBA Innovation Summit, we've had the 1.5C Climate Tech Discussion Summit. We had the Scale Up Impact Summit and also the Asia Healthcare Innovation Summit. And that's been over the past few days. We've still got a Game On event over the next 2 days, Asia PropTech, as well as, of course, KPMG's Connected Cities Conference that everyone should actually make time for this Friday. It's going to be absolutely excellent. So it has been pretty busy, and we've had 2 years of virtual events, actually, and this year is the first one we've actually come to a hybrid, so we're actually meeting face to face. I think there's been a lot of pent-up demand. Last year, in terms of just actual attendee numbers, we had about 38,000 people streaming in over the week, and another 240,000 or so people coming in via streaming media. We're hoping to get something quite similar this year. All the indicators, so far shows that there is, those kind of numbers are coming up. But that face-to-face, that interaction, the networking, nothing replaces that. And it's just been incredibly vibrant.
That's excellent. Really great news, Jane. And again, you have been very much focused on driving this festival, as you said, for the last 7 years. So I think you've done a brilliant job. Pat on the back, Jane Chan, a pat on the back.
It's definitely a community effort.
It is, but I was going to say it is a community effort. One thing that I can say is that the ecosystem, not just here in Hong Kong, but I think we're seeing that ecosystem emerge all around the region. And I think, again, Emerging Giants in Asia Pacific is testament to that as well. Now, I wanted to ask you, because you've been involved in the Start Me Up, or driving that whole Start Me Up Hong Kong scene at Invest Hong Kong since 2014. Wow, can't believe it's already, those many years. What are you seeing when you look back? Being a little bit nostalgic. What do you see as the key drivers right now when you kind of compare things with 2014?
Well, Rebecca was very much, around and one of the key proponents actually during those early years as well. And she was one of the first to cover some of the big giants that were coming out of mainland China and, further on to Asia as well. I think she'd agree with me, actually. If we look back to those kind of times, we did see things happening, but it was actually, little clusters of things happening. There were, groups of like tech startups doing, some really interesting things, but dotted and scattered. And I think the biggest thing we've seen is more the maturation of that whole ecosystem, actually. So instead of just having those kind of startups, which of course you need to basically seed your ecosystem, that in itself attracts a whole lot of other kind of peripheral and cascading kind of players as well that really help to contribute. So we're talking about the investors then, that start stepping in and who are taking interest in some of the technology that's being done. But you need all these other kind of players in order to actually develop further. You've got to have the fundamentals. So the fundamentals that was great for Hong Kong was that we had access to market. So the access to market was Hong Kong itself. It was the, mainland China. And of course, now the word is the GBA, but also through Hong Kong to other parts of Asia as well. So that fundamental access to market, access to talent. Hong Kong has 5 of the world's top 100 universities through the QS ranking. So our talent is incredibly, professional. They are multilingual. They are used to dealing cross borders. And I think that really helps as well. And finally, the other fundamental that we had was basically access to capital. The stock exchange is incredibly liquid here. Hong Kong is one of the world's financial centers. But in addition to this, we're also seeing more and more kind of investors getting into early stage kind of investment. The family offices, the angel investors, they're getting into the C, the A, the B kind of stages before the private markets take over. So those were in place. But now we've got, the corporates like KPMG that has also been very, very much involved from the very beginning and, supporting this ecosystem, nurturing that. And, all these other kind of support kind of networks, accelerators, the incubators, the co-work spaces, I think they all play a part in actually nurturing this ecosystem.
Yeah, I think that's spot on, Jane. And I think that's a good point. And I was going to ask you as well, how about the diversity? Because there's a lot of conversations right now that, Hong Kong is now very much about being part of China. Again, you and I are on the ground. I don't necessarily see that, but I just want to kind of get your views. And do you still feel that, Hong Kong is an attractive place for startups and for us to do business? Or is it all over? Is it the end of Hong Kong, Jane Chan?
I work for Invest Hong Kong. I promote Hong Kong, so I definitely don't think it's over. But let's get away from the subjectiveness. I think people are always going to have their views, whether they're, their own personal views, the media views it's driven. But let's look at it more objectively. Let's look at the figures, the statistics. I think, those kind of stats tend to give you a much more of a concrete kind of picture, I think, of realistically what's going on down in the ground. And we have been tracking the development of the startup ecosystem for the past 7-8 years, actually. We've been doing a survey to take a snapshot of what the ecosystem is like. And, over the past 5 years even, we've seen a massive increase in the number of startups, 76% actually, in terms of the number of startups residing in the co-work spaces, accelerators, incubators. So last year's figure, we had just over 3,700 startups. So that is already, quite a substantial kind of increase. Over 2020, the number was like an increase of 12%. But one thing I always like to highlight, and I think people outside of Hong Kong may not know, is how international that ecosystem is. So about a third of our founders are actually from outside of Hong Kong, or they're returnees. If we're talking about the exact number in terms of founders from outside of Hong Kong, we're talking 28%, with the US being the second biggest kind of country of origin for those founders. We've got another like 7% or so of the returnees, Hong Kong people who have been educated abroad, born overseas and coming back and making a difference. So that diversity in terms of that international mindset and different way of looking at, problems has, you marry that in with the local expertise. I think we've been seeing some really great results. We've had 8, 9 unicorns, official unicorns happening in Hong Kong. We've had 2 recent exits, SenseTime and Prenetics listed on the New York Stock Exchange a few months ago. We had SenseTime that went public on the Hong Kong Stock Exchange in December of last year. So all these kind of details, I think, really tell you that we are seeing some substantial growth, and we are seeing, diversity through that, whether we're talking about the types of sectors that these startups are in, as well as the countries of origin that these founders are coming from.
Sure. Jane, I know we're running out of time, and I know Rebecca is going to be staring me down any moment. But before we do that, I know she's just before we do that, COVID-19 has been a massive challenge, but also I think it's fair to say that COVID's accelerated everything digitally. So what have you seen? Is that the case? And, perhaps is that been somewhat of a benefit because we're all now learning to get more digital?
I think all of us who are working in that tech sector have recognized that COVID has driven a lot of developments in certain areas of tech. It's not even across the board. So of course you're going to have companies that were working on more like traditional kind of retail, maybe being slightly impacted and things, but we are seeing massive growth in other areas. EdTech is one of them, payments, contactless payments. Right. The virtual events that we're now leveraging on a day-to-day basis that we don't even think about.
I think, sorry, Jane, I was going to say, I think that's important, isn't it? Because people think about Hong Kong just being fintech. And actually, it's not just fintech. And we know with the likes of Cyberport and all of these other players, what we've seen a massive spike in digital entertainment and esports. We've seen a lot of things around smart cities, smart living, all of these different things that are happening right now. We're out of time. I know, Rebecca, we're out of time. But what would you say to those entrepreneurs and investors that are kind of joining Silicon Dragon this morning? Any final thoughts that you want to share with all of us?
Well, I would just say, if what we've been talking about Hong Kong, Asia so far has whet people's appetite, please join us at the Startup Hong Kong Festival. There's still events happening, and you can get a really good snapshot of what's happening and make those kind of connections and hopefully see for yourself how vibrant this area really is.
Okay,
absolutely. Great way to end it. Jane, Rebecca, over to you.
Thank you, Anson. Thank you, Jane. And now a perfect segue, because we're going to go to a Hong Kong entrepreneur founder who knows Hong Kong very, very well. In fact, many years in Hong Kong. And hello, Yat Siu. How are you?
Hi, how are you? Great to be here.
Good. Thank you for joining us. So I already said that for anyone who hasn't met you yet or heard you yet, that's probably a very small group at this point, because you've had so much press in the last year and a half. I think you must be kind of tired of all the media interviews, but anyhow, definitely everyone who has not heard him yet is in for a real treat to hear about why Animoca Brands, why it matters today, why it may matter more in the future. So Yat, tell us, why does Animoca Brands matter?
Well, great. And actually, Rebecca, I do remember, I think it must have been, was it 10 years ago that we had a first chat, or was it 8 years ago or 9 years ago?
It may have been, but we've had several in the past year.
Yes, that's right. That's right. But anyway, it was such a long time ago. But either way.
Yeah. But yeah, you were in Outblaze, and that was before. I mean, your history is really very interesting. I wish we had more time to go into it.
No, sure. But yeah, but very quickly on sort of Animoca Brands. So Animoca Brands' mission is to deliver true digital property rights. And what that really means, as I mentioned a number of times before, is that for the first time, in Web3, we actually have the ability to own basically our equity in a piece of, the internet, as it were. Right. So if you look at Web1, obviously that was commonly described as the read web, the internet of sort of information and knowledge that you could take. Web2 was read write, and Web3 is read write and own. And that's the primary way to think about it, is that because through blockchain, now data is a public good. That means all the data is in a transparent marketplace, in a transparent layer that we can now see and audit, versus where it is mostly today inside Facebook or inside sort of Google, where the data is a private good that is controlled by the platform in and of itself, and it has all the benefits thereof. And
But yeah, for the creators, I get that there's a lot of benefits in moving to Web3. But what about just people who are just passive? They just are coming in and they want to watch something. Does it matter for them?
It matters greatly. And the reason why it matters greatly is, one, the easiest form is participation, which is to say that I'm actually sort of participating in this and I'm contributing through the participation. Now, the parallel to think of is this. All of us, for instance, who use Facebook today, we are contributors to Facebook. We add value to the network of Facebook. In fact, if none of us use Facebook, Facebook will be worth nothing, right? So even though we think of our participation in Facebook as maybe passive, or maybe even of not much value, because we think our time is maybe not that valuable, which of course is we think is incorrect. Through the participation, we are already creating both value to the network and thereby a communal effect in which we don't actually participate, even though we added to that value. So, when you think of one of the first big use cases with non-fungible tokens, which is what property rights represents in Web3, the artist. Well, an artist, for instance, can just make a piece of art and he sells it, okay. But the value of the art and the spirit of the art and its sort of growth doesn't come from the artist alone. In fact, it comes from the collector. But how does the collector participate? Simply by owning the art and by talking about it and by spreading it or by appreciating it. And so if you have 5 collectors, the network of the art is a certain size. If you have 5,000 collectors, the art becomes more valuable or more interesting or more famous or has more utility. So the point of this one is that even passive participation is actually a very form of active participation. And so that means that you don't necessarily have to buy into it. Just by being there, you're adding to this. Maybe the one last example I want to give is this play to earn example, where people are playing games and making money playing games. That sounds almost, particularly for some of our Asian parents, it sounds almost like, oh my goodness, this is like a nightmare. My children are just going to play games. But the reality, of course, is that in the gaming world, which is a $180 billion business last year, and will grow to probably over $200 billion or more this year without Web3, just the gaming business, which is bigger than film and music combined. The majority of the revenue comes from people paying of a single-digit percentile, because maybe everyone here who does play mobile games, which is most of us, by the way, in the world, we don't pay for our games. So how does a game company make money? It makes money from the 3% or 2 to 3% that pay money, right? Now, if the free players don't play the games, even if it's free, then the people who would normally pay wouldn't pay because there's nobody to play with. So in fact, all the people who are playing the games for free, which by the way, countless hours are spent, right? To perhaps the horror of many of parents, we're like, oh my goodness, they're just playing games all the day, right? But what they're doing, the other way to think of it is that what they're doing is they're working for the game. Because if they're not in the game, other people won't pay. So the people who play, they have enjoyment, that's true. But if they're generating value, why should they not be paid for this? So this is the
Sure.
This is sort of the way to think about this.
Right. So it's so different from Web 2 with the advertising being the business model. So the business model totally is disrupted with the metaverse, with Web 3. So how does a company like yours then make money from the metaverse? I get it that the creators can make money, they can own their own digital rights, but what about the companies that are behind it? That like your company is invested in a whole bunch of other metaverse companies.
Yes. So for Animoca Brands, we're a bit of an unusual beast this way because we take 2 approaches. One of them is where we are the creator. So we make assets and product. Like Sandbox is a metaverse that is owned by Animoca Brands. It makes money from the selling of land and creating the platform as it, but that's then owned by the end user, and they create their virtual experiences around that, and we take a fee. And what's also interesting is that we're able to also take continual transaction fees from the secondary trades of these items and assets, almost like a GST or a VAT, which we think makes it more sustainable because we can now track that on chain. And that, by the way, is the way I think most people will generate value from this, because all of our time is a form of data. And that data, how it translates, now becomes something that is tangible, right? Which is the other thing. One of the reasons why, I can actually audit the value of my time on blockchain. I know what it's worth to someone. You know, it might not be worth a lot, but at least I know what that is, which I couldn't tell before. And then the other thing that we do as Animoca Brands is that we're also very prolific investors. But the reason we invest isn't because, of course, we hope for good outcomes, but isn't principally because we're hoping that we're going to make, 100x returns. Although in our case, it has been quite successful because we were very early with OpenSea and with Dapper Labs and with Decentraland and Axie Infinity and over 380 companies today, actually, that we've invested in. We see it as building and boosting an ecosystem as a whole, because what happens is that not every business needs to be sort of, say, a major success in and of itself, but they add and contribute to the value of the network, which then basically enhances everything else. And the one difference about Web3 as well is you can participate not just by a project, but you can participate through owning a piece of the network itself. So in other words, by participating in Ethereum or by another layer 1 or layer 0 or layer 2, whatever platform it is, could be Polygon, could be Flow, you're actually participating in the whole network, and you're benefiting through that participating network, both everyone else who owns the tokens, as well as whatever else you might be building on top of it. So Web3 does have a very strong communal spirit. And I think this is the part where sometimes it becomes difficult for, let's call it, classical Web 2 or traditional business thinking, where you're normally looking for a zero-sum outcome, where you're trying to find who's the winner, who's the one who'll take it all. We want to back that. And that philosophy is incompatible with Web 3. But I think this is there's also a generational thing, because I do truly believe that, especially the younger generation, actually rejects the notion of zero-sum. They don't like the idea that it can. They are as humans, we're communal anyway in spirit, but through a history of business practices, we have been trained to think that we must find a winner. And then VC money has exacerbated that, because they would then end up backing basically the ones that they think would be the winner. And suddenly you have outcomes where one company might get like $50 billion, right, and everyone else gets nothing. And I think this is the challenge. So part of our investment strategy is to help diffuse that and create more equity across.
Okay, so your company itself has pivoted, started out as a mobile gaming company, and then you actually got into NFTs really early.
Correct.
How are you able to spot these opportunities? And do you think NFTs are a fad, or are they here to stay?
Well, quickly on NFTs, I mean, they to us represent the actual digital property rights in itself, right? Because they're the ones that actually have the scarce properties that can identify a property. And I think one of the things to be clear about why NFTs are so interesting is not because you can make a scarce item and it could be rare. That seems to be a narrative, but that's not the true power of a non-fungible token. The true power of a non-fungible token is that it can identify its history uniquely to its owner or to its collective community. Right? The popular example I often give is a wedding ring. And the wedding ring is in and of itself very fungible. It's made of the same materials. But once you own that ring, it's very special to you and your family and maybe a small group of people. And that's the point. It's your memory, it's your legacy, it's your history. It identifies, your humanity. It's things we actually care about, and we need to identify.
And you can build that into an NFT.
Yes,
that you can
right.
own, and
Exactly.
it becomes very special to you.
It is, and it's unique. It's unique in the sense that it's yours. Whereas in the digital world, you could have a digital sword, and you can emotionally attach to it, but you never know it's yours, because actually it never is, because it's just one entry out of a billion, right? Yeah. But in terms of so we think that's the general trend, and just generally speaking, Web3 we think is something that is going to be the next iteration of the web, because it's a better version of that. Yeah. It's kind of what Web 1 should be.
What's the timing on that? Do you think that will replace Web 2?
I actually think in the next two or so years, we're going to hit 300 million plus users in the space, which to me then becomes the tipping point in where everyone just has to move in, because we're still only in the tens of millions of users in that space. So it's still a very, very small space. But this comes down basically then to the next point I want to make, which is that Web2 businesses have very little ability to compete with Web3 because of the fact that they can't have capital formation because they don't have property rights attached to it. So the reason why in Web2, most of the business model is based on advertising is because it's a rental type model. I take your time and it's worth $1, 10 cents, maybe 1 cent, right? It's a very low value. However, if I can now have rights to decide ownership, then other people can participate by giving it capital formation. Like for instance, if your time online, through your activity in a game with an NFT is worth $1,000 a year. Well, in a Web2 platform, that's all it is. It's worth $1,000 a year as its rental. However, if you allow for network effects to create a bank or financing agents can say, well, your time is worth $1,000. Well, I can either give you a loan for that, which just might be 3 times or 5 times forward value, or I might acquire it for you because I might perceive a 10% yield, which is what we do with real estate, with assets, with everything else in the world. Which is the reason why when people in Web2 world traditionally looked at NFTs, they're like, how is this valuable? How is this expensive? They don't understand because they're not looking at it from the lens of what actual property rights does. Yeah. And I think that means that an end user in Web3 is worth 20 to 30 to 50x of the relative ARPU that a Web2 company does. That's why I think it's not just better for the end user who reaps the benefit of the capital formation. It's also better for the company who's in it because they also make more money from the end user.
So you seem to think it's inevitable then?
It is inevitable as far as we're concerned, and I
okay.
think
as far as you're concerned, it's inevitable. Okay.
Yes, correct. And we've bet this way as well. I mean, 4 years ago we made these investments, and we continue to. So we might be terribly wrong, but we believe it.
Well, there's something to be said about timing. I think your timing in investments in these companies has certainly paid off. But I want to ask you about how are you navigating all the volatility in the cryptocurrencies? Because I mean, you're blockchain based.
Yes,
mobile
correct.
games or
so it's the lens of time in which you look at this. Because one way to think of the construction of Web3 and also the economic models of Web3, we think no longer fit the traditional business P&L model, which of course may be necessary, but it's hard to do so because the economic outputs look different. In other words, we think that when you look at a project, say like Sandbox, for instance, or ApeCoin, whatever, you need to look at it almost like as a GDP, as a national value output. And so because we're building communities, which effectively are the formations of, let's call them little nations and hopefully bigger ones. So that means that when you think of the growth curve of this one, then you look at sort of not this thing not as in what happens in the next 6 months or 12 months, but rather what happens in the life cycle of basically building a community that should last, the ages. And so when you look at Ethereum, for instance, as a just from a price point, right, which is crude but an example. Yes, if you look at it for the last 6 months, you go, oh my goodness, it went from 3,000 to 1,500, and it's been very volatile. But when you look at it from the lens of 4 years ago, when Ethereum was $100, right, or $150, well, then that doesn't look so bad, right? Because actually it's been very successful. Yes, maybe it isn't, the 30, 40x, but it's still 10x relative to where it was because you're taking a long horizon. I just came back from Korea for Korea Blockchain Week about three odd weeks ago. And, I made the parallel example of, if you look at the South Korean economy over the last 40 decades, South Korea was one of the poorest nations, in fact, poorer than North Korea, say some 40 years ago. Today, of course, it's, top 10 or 12 GDP in the world through its creative output and so on. And then when you chart its growth as an economy, you see all these sort of dips, right? Asia economic crisis, SARS, like all these things that happen. And Hong Kong, by the way, is the same. When you look at the history of Hong Kong, right? When you take the lens of, between 2008 and 2009, you go, oh my goodness, that was a disaster. Yes. However, when you look at the lens from, say, even just the 7 years or 5 year lens, actually, it's generally a positive lineup because you're developing up these rights and economies. So if you're here to build, and then it's not an issue. But if you're thinking of it really in terms of trading, well, then I have no answer for you. That's a different type of business or person. And I think because so many people from the traditional finance world are looking at crypto not as the construction of a new ecosystem, but more from a trading perspective, their lens will be different. But that's not the way, we think you should look at it, because that to us is, basically the future. It's different.
Who do you regard as your biggest competitor?
So, it's interesting. We actually don't think we have a natural competitor in the sense that we haven't constructed ourselves in that way too, because we are also invested in what one may argue would be our competitors. So we're very good friends with, for instance, Dapper Labs and the Flow ecosystem, or with Polygon. Some people might say, are they kind of investing as well and doing something like doing GameFi and so on? And we're like, yes, but we do it together. And we both sort of share in the network effects because we are also holders of their tokens and we are holders of the ecosystem and we invest in the ecosystem. So I don't think the framework of thinking of competitors is the same as in, who will win in this space. However, we do, of course, have within the ecosystems games that we're building that, might be sharing customers, and maybe it's about their attention. But in reality, what happens is that even if the games of some other game might succeed or do better, actually it enriches the entire ecosystem, not just because of our investments, but also because of gross participation. Now, things could be different, say, in 3 to 5 years when we hit some kind of critical mass, right? But we're not even close to that. So for us, our main focus right now is all about basically mass adoption, because we still need to onboard a few billion people into the space. So we've got a long way to go before we can talk about sort of who will be truly competing against, if that's even the case.
So I'm taking away from this mass adoption, long trajectory, good timing, and hands in many pockets of a fast evolving marketplace.
You just have to look at this sort of who else is building in the space, right? 4 years ago, you could argue it was, people on the fringe, arguably. However, today, some of the smartest and sort of most distinguished sort of entrepreneurs and people in the space from Web 2 have all moved to Web 3 or are building in Web 3.
Or trying.
Yeah, because they're seeing what it means and how it's really the iteration of the web.
If they don't move to Web 3, are they out of it entirely?
So I think it's a paradigm shift. So if you don't go into Web 3, then I do think that ultimately in the mid to long term, you will sort of become a sort of quasi obsolete in the same way that you could be building websites like you might do in Web 1. Right? The websites aren't gone, right? However, if you're not in the social web in Web 2, if you're not on Facebook or on Instagram, then you're kind of irrelevant too. So you need to participate in Web 3 to remain relevant, because that's where the youth is going. When you ask anyone under a certain age, for the most part, if they're actually thinking about investing or are investing, they generally tend to talk about crypto as opposed to stocks and bonds, for instance.
Yeah.
And everything they do on Web 3 is now a paradigm of ownership. Yeah. Right? It's a much more superior model.
Yeah. Okay, a lot to think about, a lot to digest. Thank you, Yat.
My pleasure. Thank you.
And everyone, thank you for hanging in there as well as we get to our next session, where I'm going to be introducing some more founders from Asia. So we have with us Trung Nguyen from Loship from Vietnam. We have Julian Arto from Zenyum from Singapore. We have Alex Liu from Maycoin from Taiwan. And we have Alvin Yap from Geek Plus from Beijing. As I said before, we tried to keep this report as representative as possible while also highlighting some fast emerging companies. So I think we have a good representation right here with Vietnam, Singapore, Taiwan, and Beijing all represented. And I'd like to ask each one of our executives here to just give us 1 minute snapshot about what their company is and why it matters. And then we're going to do a roundtable discussion to talk about kind of the challenges and the opportunities that they face, and they can ask one another questions too. So it'll be a roundtable. So Trung, why don't we start with you? Tell us about Loship. I wrote here as just a kind of a crib note, quick commerce. Tell us more. What does that mean? And you need to unmute.
Thank you, Rebecca, for adding me into the list. and giving me the opportunity to appearing here. I'm Jum. I'm the CEO of Lordship. We are the leading e-commerce company in Vietnam, and so e-commerce, I think it is quite a very globally industry nowadays, because a lot of people try to argue it's necessary to do very ultra fast delivery, or it's necessary just fast delivery, or it's just 1 hour delivery. But our objective is just try to deliver everything in the local to the local people from A to B in the local. So the quick commerce here only means that we try to deliver. It means on-demand delivery for everyone. Yep. So we deliver.
Your business is very local, isn't it?
Yeah, right. So we do everything in a very local. So in China, I think it's a very comparable company in Meituan, and we do food delivery, we do grocery delivery, we do laundry delivery, we do medicine delivery, we do flower delivery. So basically, if you are a shop owner and you want the customer to access to your you want the customer who stay, let's say 5 kilometers or 7 kilometers or 10 kilometers away from you, to be access to your shop, and they don't necessarily need to go to your shop. So the you Lordship, that is very easy to but we as a customer service. So
and your business is also, your startup is also business to business, isn't it?
Yeah. So when
it's a different business model.
No. So let's think about this way. So when you already grow massive merchant network, right? So right now we have over 400,000 merchants. It's kind of massive in Vietnam. So when you look at about that, so you will try to think about what can you do more to, when you can leverage the same driver network, you can leverage the same merchant network, and say what can you do more to monetize from there, or to build adjacent business around there. So when we do is B2B, it meaning just we try to supply everything regarding to the kitchen of the restaurant. We try to supply everything in terms of the ingredient to the merchant. Because when we think about the business, we always think about, we don't try to become just a very niche market company. We try to think about a massive opportunity from our merchant network. Therefore, we do the B2B, try to supply everything in terms of the ingredient to the merchants.
And just one other comment before we go on to Julian. I remember from interviewing you before, you said your drivers are your most important ingredient to
exactly
your drivers. That's what you value most of all, which is it's an interesting point. So okay, we'll come back to that, but I want to go on to Julian, who's standing by there, and Julian is joining us from Singapore, and he's in the health tech business and also dentistry. And one of the takeaways I have from interviewing him was he talked about this Instagrammable moment and smiles. So Julian, tell us what is Zenyum about, and tell us what Zenyum means also.
Right. Thanks, Rebecca. So Zenyum means to smile in Bahasa, so the language of Indonesia and Malaysia here in the region. And if you think about Zenyum, then essentially we're tech-enabled consumer play between the intersection of health and beauty. So as you mentioned, we play in the dental category. We like to dub it rather smile cosmetics, because what we're trying to do is take a very old category and bring a range of products to it that where we change the experience through technology and through design. So for instance, we have 3D printed invisible braces that people here in Southeast Asia use to straighten their teeth. We have an electric toothbrush, which is the #1 selling toothbrush on the big local platforms here like Shopee and Lazada, the Amazons of Southeast Asia, so even ahead of brands from Procter & Gamble or from Philips. And we have a range of other products like all natural ingredient toothpaste, mouthwash. Yeah, you kind of catch the drift.
I see. So you really have a diversified product mix then. It's not just the braces, but you've gone into these other ancillary areas.
Right.
So
We've always seen this. We've always seen this as a consumer play across a category that here in Southeast Asia didn't have much competition, and so we expanded in concentric circles around the invisible braces there, and now have, I think, over 16 SKUs out there.
Okay, what is the adoption like in Asia Pacific? What are your markets?
So
adoption rate?
So that's what makes it very interesting, because I think whether you look at the invisible braces or it's something like a power brush, like an electric brush, it is still very much behind markets like the US or Europe, or even China from that perspective. But the trend is very, very clear, right? So for instance, just speaking about the invisible braces, there's not that much data for Southeast Asia, but in China in 2015, you had about 9% of all orthodontic case starts on invisible braces. As of today, 5 years later, that has more than doubled to 20 to 25%. And so you have these massive tailwinds in that category, where we're 100% sure that eventually within the next 10 years, we'll end up in a similar state in terms of adoption as you already have proven and have seen in markets like US and Europe.
So you're from Europe and you started your business in Singapore. Why did you do that?
So I'm originally from Germany. I haven't lived there in over 16, 17 years. So before actually coming to Singapore, I was based for 5 years in Nairobi in Kenya. And I like fragmented market landscapes. So I built there what's nowadays the largest content and classifieds network in sub-Saharan Africa across 8 markets. So I like a multiple markets play. And when coming to Singapore, it was always clear that Singapore is a great market to find product market fit, to scale up very fast, especially if you have medical device like we do to get your licenses. The government is replying within 24 hours to any email you send to them. It's amazing. And so it's a very good ground to kind of start the business here. But it's obviously also a small market. And so for us, it was always clear that we wanted to expand across Asia very fast. As of today, we're in 9 markets, and it's a fantastically dynamic region here.
Right. And what is the price comparison Asia Pacific to, say, United States for a product like yours? Is it less expensive because you're in Asia or not?
I always say to the team, right, whenever we're thinking about kind of pricing strategy, price is never a good mode. Right. So yes, our products are more affordable. They're especially more affordable, again, if you compare them with the big US brands here in the region. And obviously that helps us to expand our TAM, our total addressable market size. But I think even more important than, let's say, only the absolute price that you offer to customers is, can you offer them installment options, for instance, right? The braces are costing a couple $1,000s typically, even in markets like Vietnam or like Malaysia, where the income is lower. So there you then have to see that you work with the flurry of BNPL providers, for instance, and just offer the right options for the consumers in the local markets to purchase.
Okay. All right. Good. Let's move on to Alex. And he's going to tell us about MyCoin in the fintech space. In crypto services, borderless crypto services. It's one of the big takeaways I took from our interview. So Alex, tell me what's new with your startup, and why is it in Taiwan?
Sure, thanks for having me, Rebecca. I've been in Taiwan, the place of my birth, for almost a decade now, and running this business called MyCoin, which is the first and at this point the largest crypto exchange on the island. In some ways, apart from being a business, it's been a kind of giant social experiment, because even back in 2013 when I discovered Bitcoin, it was a thought experiment for me at that time to sort of mesh that against what has been a pretty conservative business and even political culture in Taiwan. Just as a case in point, the Taiwan dollar is a controlled currency, so it's not freely convertible with let's say, the US dollar. And so that's a business impediment that we've had to work with or around for the past decade or so. But in the next month, we'll be launching a Taiwan dollar pegged stablecoin. That's the result of much conversation with the central bank and the regulators, but we think this will finally open up a full throttle on-ramp for Taiwanese users into Web3. They're at this point not at liberty to convert large amounts of Taiwan dollar into, let's say, US dollar stablecoin or any other cryptocurrency, but with this native Taiwan dollar stablecoin, there is no foreign currency conversion that is involved, and as such, that's what I mean by a full throttle sort of on-ramp and I suppose off-ramp. I took quite a bit of what Yat said to heart. What I meant about a traditional sort of mindset around here is, Taiwan's pretty focused on things like manufacturing and property and so forth, and that is, how should I say, I wouldn't call it exactly zero sum, but I mean, it's something very quantifiable in traditional terms. The world that we think we're inhabiting now is not quite so, quite so zero sum. So another way to describe our last decade or so of business is, methodically removing impediments for people to enter into this less zero-sum world. For what it's worth, if Yat's still around, I'd like to kind of put the question to him, which is, if this Web3 is so inevitable, I share his opinion that it is, but we're still in such early innings, right? Where we have, I agree with his estimate of a few tens of millions of active users. Even his prediction that in the next 2 to 3 years we'll be in the hundreds of millions is still, how do I put it? I mean, it's still relative rounding error compared to, Web 2 users, or even the number of people around the world who have smartphones. So I don't know if he wants to take that question now or later, but I mean, that did come up during his talk. So
Yeah.
in any case, Rebecca, just to quickly summarize here,
Yeah, we were
Taiwan,
talking about when we're going to get to mass adoption. And
right, exactly.
could be decades from now.
Well, maybe that's a question for the panel later on, but so Taiwan, in summary, is a reasonable sized market, probably a bit larger individually speaking than Singapore or Hong Kong. It's definitely not a large market like the mainland is, but we found this market to be a good manageable size as we've sort of kind of prepped the ground for Web3 here over the past decade. So I'll leave it there.
But you were originally in Beijing. You're starting with this, experimenting with it in Beijing, right?
Well, I was in Shanghai when I discovered
Shanghai, okay.
when I discovered Bitcoin. I mean, even in 2013, I quickly came to the conclusion that the Beijing government would not allow Bitcoin to sort of run rampant across. So I couldn't like start a unicorn company in mainland China doing purely Bitcoin. That's what was one of the most important reasons I decided to decamp for Taiwan. So this is the sort of thought experiment that I mentioned that's been going on for almost a decade now. Yeah.
I see. Well, it seemed like that was a smart move, right?
Well, I'm still around to talk about it, so I guess but where we go from here is the real question, right?
I see. Well, yeah. Do you have any answer to that? Where do we go from here?
Well, I mean, what the launch of the Taiwan dollar stablecoin next month by us and a consortium of partners, I think will be a good indicator. Right now, the regulators are adopting a wait and see approach, because in many ways, this does abut against the foreign currency controls that are in place, right? Now, we're saying it's such a small scale right now, and we abide by all the regulations, including anti-money laundering that are in place. But the reason I think they're willing to bear with us is because they recognize the dynamism in this industry. They see all the young folks that Yat mentioned, sort of spending a good chunk of their waking and perhaps sleeping hours doing this stuff, and so they don't want to close that off, right? This dynamism, this pocket of dynamism in the economy.
Right. Right. Okay, so this is one of the reasons the governments are supportive of a number of these startups. It's an economic development. It's the future. You can't rely on old industries. You've got to keep inventing.
Exactly.
New businesses have to come in and and take the lead. So I think this is the case with Geek Plus in the robotics area in Beijing. And is Alvin Yap with us? Alvin?
Yes. Hi.
Okay.
Hi.
Good. Hello, Alvin. So tell us, with Geek Plus, it's in the robotics space, and China is its global hub. And you're somewhere in Southeast Asia today, somewhere outside of Beijing. But Geek Plus is headquartered in Beijing. And how is that a plus for a robotics company to be in Beijing? Why are you in Beijing? Why is the company in Beijing? What do you get out of that? Is that a good base for a robotics company?
Well, it's a nice question and good question is that you asked. I think China, or let's say in Beijing, we actually set up in the company was set up in 2015. So during then, which is the start of the robotics evolution, there was a lot of support that's actually given by the government, and there was also a lot of interest within the Chinese domestic market that has quite a huge demand. Okay, for let's say things to be faster, delivered faster, expectations are actually higher, and then we found that there is actually an opportunity in this space to do the robotics, which is exactly the type of technology that's used to meet this kind of demands. And the country itself, or in Beijing, there is actually a lot of support that's coming from the governments, and not only that, it's also a huge market. So it was actually a very, I would say that was actually a very productive environment for a robotics company like Geek Plus to actually grow up and scale up fast.
Right.
It was a good start.
Yeah, that definitely makes sense. And your company is actually going global. I think you've entered the US market as well, which is pretty unusual for a early stage startup.
Well, I mean, whether early stage or not, I'm not sure. I mean, well, we started in 2015, and in 2017, we recognized that when the company was set up, we wanted to be a global company. We are not so much of saying that we want to stay in China and then we just want to expand, let's say, within the region. Yeah. We feel that there are bigger markets out there, and so hence, in the last 3 years, we actually set up companies in Europe, in US, and as well as Southeast Asia, building up headquarters to kind of like export our knowledge and technology out to those markets in the other regions. And I think that as of today, I think that decision actually helped, or kind of like the decision was actually vindicated because we are actually having quite good response from those markets.
Right.
Good response from those markets for our kind of technology. Yes.
Okay. So for all of you here, we'll open it up now to more of a roundtable discussion. How important is it that you have original tech innovation to be able to succeed? How important is that? Can you just copy? Can you copy, or do you have to actually originate, start something totally new to succeed?
Maybe I can comment on that from a consumer perspective first, before before the blockchain guys go, or the tech guys. I think, look, if you're asking me, have we completely reinvented the brushing experience, right? Or the invisible braces, which has been around for 20 years as a product, then the answer to that is no, right? So to a certain extent, we looked at the markets, and yes, we saw, okay, there's some massive categories very deep in existing established markets. So likely this will also have the same tailwinds here in Southeast Asia. However, I think what people underestimate is how much you can localize the experience and the design towards a region like Southeast Asia. So for instance, in the case of Zenium, it has to do a lot with how do you actually unbox a product, right? Like how do you have it designed? How do you communicate with customers by pushing the button? Do you put like, I don't know, very feature-oriented communication up like the big US brands do? Or do you create a more stylish experience that fits more with, let's say, emerging Asian middle class and millennials? And so I think there's a lot of innovation within the region that you can drive purely via experience and via design and where you play with this. I also think there's a certain benefit of knowing that you enter a category that is successful already in other parts of the world and that you don't completely have to reinvent that.
Sure. Okay. Well, Yat, I see you here, and I know Alex had a question for you. So, Alex, why don't you ask Yat directly?
Well, I did hear the question, so if that's the one. So, but maybe before,
good. Go ahead.
yeah, but before we go there, just to your first question, and the way that I would say we think about it anyway is that it's about the human experience, it's basically solving human problems. And ultimately, technology in and of itself may not be, the reason, but it provides a solution for whatever human experience, problem, issue we're trying to solve. And there's many cases and demonstrations where some technology may have been around, maybe designed for military reasons or which never actually came to the fore until we had to solve some kind of human experience, right? And so in the case of blockchain, maybe it's decentralization. The technology in and of itself, peer-to-peer networks, distributed computing is not particularly sort of special by itself. But the problem it solved later on for a group of people who then saw that, used the technology and put them together, and then, with open source and everything, sort of more amplified that, because now everyone can look at different forms of code and innovation and say, hey, that solves something for what I need, or that solves something for what the other communities need, and then draw upon that. So I think that approach isn't so much about, it is innovation, but it's not innovation in terms of, we came up with an awesome algorithm per se. It's the human problem we think that needs to be solved.
Yeah,
first.
that's universal for all startups.
Yes.
They have to have
Yes.
something that they're solving, that
Yes.
they're providing, that is a solution to some
Yeah.
problem or whatever.
And so to Alex's question,
Yeah.
I mean, outside of the fact that we're solving digital property rights, which is the movement here, is that, so I think we can take some comfort perhaps in Erica Chenoweth's work on sort of, in this case, it's actually a political work, but the point is that once you have roughly 3.5% of any given population move towards something, it creates a kind of sort of unstoppable trend, right? And so actually that number, when you think about it in gaming, is roughly 180 million users around the world. So meaning if you have about 180 million users that are basically playing, who are in traditional games, have now moved to blockchain Web3 games, then you have a kind of sort of movement that is unstoppable and becomes basically something that, it could remain arguably, a quasi niche, but it will never go away, so to speak, in the sense that it's now established. And so that's one. And we think the Trojan horse is gaming, because gamers already interact with their virtual worlds, with their metaverses, as one of ownership. They think they should own this, right? You don't ask anyone who plays a game and says, that skin you have, you're renting that, right? Nor does anyone else who's playing the game think they're renting that. They think they should own it. And they also have a natural sort of habit, shall we say, in terms of treating virtual currency as actual currency, as something that is of value. And it took 30 to 40 years of a gaming culture to get to this point. If we had spoken about all of this, even say 10, 15 years ago, we might have said, well, it would remain a niche industry. But we have 3.4 billion people educated to this idea of virtual ownership and this idea that a virtual currency, should have some value, right? Which is to us why the opportunity, the moment should be now. So we think adoption will move much faster than we think. Very similar to how, smartphone adoption, say 10, 12 years ago was.
Alex?
Yeah, so I mean, I fully agree with you. I mean, our industry has often been accused of, being a solution in search of a problem. I would say that's not entirely fair, although I perhaps see where they're coming from in the sense that most people, you know, if they're not dealing with a wildly inflationary currency, they perhaps don't see the need for Bitcoin or gold. If they're not feeling particularly captive to Facebook, you know, why would they want to own, you know, their little little outpost on Facebook? Having said that, I do believe that if we're not there already, I think we're past the tipping point with cryptocurrencies in general. I think what you're talking about, you know, we're probably just a couple of years off. That I agree with. I guess a question that's more tactical. What do you think are the sort of more nuts and bolts things that are still missing that you know prevent us from tipping over, let's say today or tomorrow? Is it just these wallets that are difficult to use, or you know, too easily hacked? I mean, what are the things that are?
So I don't think wallets are the difficult point, because I think if you look what happened in the Philippines, a country, the people who adopted, you know, Axie Infinity and blockchain games in the millions, none of them had financial education. They don't even have credit cards, right? Let alone inclusion in the financial system. And here they are, basically using MetaMask and crypto wallets that arguably are difficult. I would argue that opening a physical bank account is much more complicated than opening a crypto wallet. So it's really more about the social acceptance and norms and the standards we give ourselves. We think it's complicated because it's not how we're used to doing things on the web, right? On the web, we think that I should just log in and click and go. So we think that's the user experience. But when I open a bank account and I'm very comfortable, you know, putting in my passport and doing all this kind of extra crap, that seems normal, right? So that's part of the, so let's call it the training. And again, I think games are a good avenue for that because they can train for that. But I think the one big thing that
not everyone's a gamer. I mean, but I think
that's true.
You know,
but there's 3.4 billion people who play games.
That's half the world, especially young people.
That's more than, yeah, exactly. It's more than half the online world. Yeah. But maybe I think the other thing that just to Alex's question is that it is around also the fear of what crypto represents, right? Blockchain and crypto cannot be viewed simply as a technology. It is a social movement. It is almost, you could say, a quasi-political movement as well in and of itself. If you believe in blockchain, you believe in a liberal future, you believe in a form of property rights. There are aspects around that that go beyond that. And there is a fear that comes with this. You have people in centralized systems that feel threatened by this, or you have people who don't understand it. So I think regulators and government roles do become important for more confidence and understanding in the space, which is beginning.
Right. So let me ask a question for all of panelists then. What do you use crypto? Are you using blockchain in your business?
I do, but so I'll let the other folks answer.
What about home? What about Julian? What about Alvin? You are using blockchain or crypto in your business?
We
Well,
to be go first.
No, it's okay, Julian, you can go ahead.
So look, there's potentially some interesting applications. One thing which we are doing is we're an omni-channel play, right? That means a lot of the customer data sits on third-party platforms, like for instance, on the big marketplaces, or you can buy our brushes in a supermarket across Asia. Now, we're obviously interested to get to a kind of first-party data approach, but there's and one of the ways that we are doing that is you buy the brush in a supermarket, we don't know who you are, but then you scan a QR code and you use that to kind of activate your warranty, right? So you give us your data in exchange for that, we expand your warranty out there. There are potentially interesting applications where you could do that via NFTs, right? Like where you really kind of hand over that ownership of the brush from that perspective, and where we can identify that even in a more, let's say, data compliant way than previously. At this point in time, this is very interesting. So I love the space, right? Like from an investment perspective, also very interesting. I think we're still a couple of years out to bring applications to a consumer play like ours.
Okay, Alvin, did you want to respond?
Well, I mean, yeah, it's just unfortunate that Logic Plus hasn't really gone to the blockchain yet. but that's also mainly because of the nature of our business. We actually deal with companies. We deal with companies as well as government. So unless, let's say, there is actually a take-up rate from the businesses that we deal with, the company that deal with, and they are actually not going to the blockchain space, then we will probably go towards that direction as well. But at this point, unfortunately, we are also not in that space. Yeah.
And what about in Vietnam? What do you think?
So so my background is the computer science guy, and I have a very special relationship with one of the most well-known game in Vietnam, if you may know. So we will work together. But regarding to your question, so nowadays I think in terms of the blockchain is still in a very early day, and there are a lot of people trying to develop the uses around the blockchains, but right now we haven't seen a lot of application in terms of the blockchain in our business.
Okay, so that brings up another question. Each one of you are in different businesses, but you're all in Asia, where it's a fast-growing market, and you've managed to find niches, and in some cases more than niches. But what kind of contribution is the market giving to your company's growth? I mean, just the fact that you get this young demographic, fast-growing, willing to use digital products. What kind of contribution is that having, or do you think your company would have been just as successful in a more established market like Europe or the US, because there's so many new markets, so many emerging markets in Asia that your companies are doing well? So what do you think is kind of what's the added plus here?
Let me take a stab at this. I think situated as I am most of the time, somewhere between Southeast Asia and Northeast Asia, I kind of have a comparative, I have comparison between the two. I personally think that Southeast Asia is particularly well suited to this development of crypto and NFTs, Web3, for the simple reason that Julian identified, that just like Sub-Saharan Africa, Southeast Asia is quite fragmented. You have a lot of long tail markets, and crypto is a world where, within 5 minutes, you can have your own currency, and it's to each their own. And I think that's very much in line with the ethos of the region. There is not any pretension toward, my way is the only way. And, I don't think it's a coincidence, for instance, that, like Yat said, I mean, people in the Philippines took so well to Axie Infinity. My understanding is that people in Vietnam also took very well to this line of activity. So I think that's wonderful. I think it's very instructive for the rest of the world, particularly those parts of the world who want to take a more universalist claim to say, hey, this is the only way or the right way. I think that Southeast Asia and its combination with crypto is something that can show us all that there are many ways.
Right. And it's not just the crypto market. I mean, it's a lot of different markets. Like in Julian, it's in a consumer market, basically. It's got a consumer product.
And
it's the delivery, really fast delivery. Yeah, go ahead.
To be honest, for us, that's been absolutely fantastic, because you have this very, like the fastest growing consumer class globally sits here in Southeast Asia, right? Like you have so many millennials that for the first time in their life have available disposable income, right? That are looking for the hottest technology or kind of the hottest products that you have out there. And if you're able to build something that's tailored to them and that feels to them like, okay, I'm not just buying something copied from the US, right? That's built, I don't know, for the boomer generation in the US, but something that's built for me here in Asia, you're gonna see great adoption rates.
Okay.
Yeah,
that could be a selling point.
Yeah, I mean, I think Asia is, I think, really important. It's, more than 60% of the world's youth is in Asia, generally speaking. It's a youngest population by demographic. Most of the gamers, internet users are here in this part as well. So when you put that all together, actually, it's a fertile breeding ground for new ideas and innovations that can be used for companies to grow. And if you had asked me, say even 10 years ago, that top Silicon Valley VCs would be investing in companies in places like the Philippines or Vietnam, I would have said, wow, that seems kind of hard to imagine. And here we are, right? YGG, A16Z, Axie Infinity, and other GameFi projects in Vietnam. Really, Vietnam is on the map because of blockchain games, right? That would have been unimaginable, say even 5 years ago, right? So I think there's a lot going for the region, and I think just to address maybe the elephant in the room, there's another thing which is different, which is that normally the region does have a very large giant that does suck up a lot of the energy of the space, but which is China. But in this particular space, China, for many reasons, can participate, which has left a vacuum. And I think we should recognize that this vacuum is an opportunity for the rest of the Asian places as well to participate as well, because it's a space which they're still trying to figure out how to play in that. And I think that's why the region is developing differently from before, where normally that would have been run by probably Chinese corporations with their capital and their power and their influence.
Yeah, good point.
Rebecca,
And India is a good counterweight as well.
Rebecca, I just wanted to interject, and I do absolutely agree with Yat on that. I think, as always, the 300-pound gorilla in the room, not just me, but the 300-pound gorilla in the room is China. I think China will continue to be a very significant player in a lot of different ways. But as Yat says, I think it's a leveling up. We now have that kind of leveling up of the playing field. And I think Southeast Asia and ASEAN is equally now coming of age. And one thing that we've seen in our research, Rebecca, is that there are now over 500 million tech-savvy, digitally minded, socially aware Gen Z consumers. And Julian, I put myself as a post-millennial. I consider myself as just a post-millennial consumer. But I do think it's a very good point that Yat did make, that we are going to see some really interesting developments. But maybe, Rebecca, kind of final comments from everybody on the panel is, there's lots of people listening. You have a big audience in North America. What would all of our panel members and entrepreneurs say to those other entrepreneurs and investors that are dialing in and joining us for Silicon Dragon today? What's the message that they should take away? Is Asia the story today, Yat? Come to Asia? Is that the message?
Well, isn't that always the story? But anyway, well, yes. I mean, in very, very, very sort of maybe to kick it off, I think the region, for demographic purposes, is obviously clearly a driver. But I will say there's also one other thing to consider, is that the region has experienced positive growth. I would say, despite that there's obviously inequity and everything, comparatively speaking, in America, you've got really just Silicon Valley and some pockets. But broadly speaking, America has struggled. The West has struggled with, what's happened in the last 20, 30 years. But in Asia, it has been a net benefit. If you look at Korea, if you look at even Hong Kong and Southeast Asia, yes, there is inequity. But broadly speaking, there's been a development. And I think that the region has a lot of optimism, right? It's a different type of, youth is more optimistic, I would say right now, which is an energy that is a positive one. The way people embrace, for instance, crypto, Web3, NFTs, blockchain games in this region is very different than in the West. In the West, because of the financial nature of it, because of what capitalism has done in their part of the world, it's viewed cynically. It's viewed as, oh, isn't this just something for the rich, right? This is not for me. We need to look for something different. But in Asia, it's opportunity. This is hope. So I think, therefore, and I think this is, if you think about just the internet as well in the early days, or even mobile phone, in this region, people viewed it as a vehicle of hope. They looked at, hey, it's a new avenue, a new way to maybe have, gain prosperity or make a better life. And I think this is an energy that hasn't left Asia. So I think it's a place to be.
Good point. Yeah, great way. And how about the other entrepreneurs?
Let me follow Yat there. I think it's more than opportunity. I think looking out on the world from a crypto perspective, I think it's actually wisdom. I think I mentioned this decade-long adventure I've been on in Taiwan. I don't think the message is fully sunk in yet, although we're making a little bit of progress, which is what's embedded in crypto is essentially a newer way of looking at the world, where there is no one or two dominant poles. It's to each their own. That's a message I've been trying to get across to my fellow citizens on this island to say, hey, look, you're on your own, okay? We happen to be next to this 300 or 800 pound gorilla, and we have to get along with that gorilla. But on the other hand, when you look out at the rest of the world, you're looking out at many, many nodes. And so to me, that's actually a wise way of looking at the world, because that's the way the world's headed. However, it's far from smooth, okay, but that is an inevitable trend that we'll see perhaps for the rest of our lifetimes. So I think that's particularly relevant here in Taiwan, but I don't think it's limited to Taiwan. I think the worldview embedded in crypto is relevant for all of us.
Thanks, Alex. I think we're out of time, Rebecca, but Julian, any quick views?
I think we find ourselves in the most dynamic region in the world. And just to echo that, yes, come to Asia. It's a great place to be at.
Okay, well, very good.
How about Trung?
And
We didn't hear from Trung, Rebecca.
Vietnam.
I totally agree. I think Vietnam are lucky to be on the map of the global map for the last, I think, 12 months, 18 months. But I think in the next 2 years, Vietnam, especially also in ASEAN, will be one of the most exciting regions around the world.
So everyone come to Asia. That's the message, Rebecca. Rebecca, you've got to leave Silicon Valley, New York, and you've got to get yourself back here in Asia, Rebecca. I think that's a very clear message from all of us.
Well, I have to say, I started out in Hong Kong, and Hong Kong before Silicon Valley, I think. And but I've been, COVID interrupted my Hong Kong journey for a little while, so I'm angling to get back. Anyhow, in the meantime, thank you everyone for joining us. And I want to just say a few closing remarks here, and also let you know that I've been also on a journey during COVID. Thank you for joining us, by the way. Invest Hong Kong, Start Me Up Hong Kong, KPMG, thank you. Hong Kong Science and Technology Park, thank you for helping us get the word out. Really appreciate that. Silicon Heartland, what is that? Silicon Heartland, it's more than Silicon Valley. It's Silicon Valley plus the Heartland in the US. It's my new book, which is coming out very soon. It's already online. So I've gone from Silicon Dragon in China to Silicon Heartland in the US. I'm always looking for the next frontier. I agree with you, Asia is it. I love Asia. I really like covering it, and I continue to cover it. But also I'm from the Heartland. So I also get the culture of the Heartland of the Midwest, and I can see how it's transforming itself into a new tech belt. And it has to come from a very tough place, because a lot of that part of the country has been a rust belt. So to go from a rust belt to a tech belt, that's Silicon Heartland. I'll let you look it up. And I, again, just want to thank everyone for joining us. Thank you for the wonderful interviews with the founders. Thank you, Anson, for your comments, and Jane as well for hers, and Darren, and Yat, and Hong, and Julian, and Alex, and everyone. Go download that report.
That's right. Check the report out, ladies and gentlemen.
Giants.
Emerging Giants in Asia Pacific. Check it out.
There it is.
Check out all those amazing interviews with everybody on the briefing.
Very good. All right. Well, thank you, everyone. I'm going to stop the share now, and we're going to
Thank
call it.
you.
We're going to call it. So
Thank
Thank
you,
you.
Thank
Rebecca,
you.
and thank you,
thanks for
everyone.
joining us.
Bye-bye.
By the way, we recorded this, so we'll be putting this on YouTube pretty soon. So
Thanks,
if you
Rebecca.
haven't missed part of it, it'll be on YouTube. Okay, take
See
care.
you back in
Thank you
Asia,
again.
Rebecca. See you soon.
Back in Asia. Okay, bye-bye.